All you hear in the news right now is inflation, high interest rates, and don't buy a house right now. But do you listen to all of that noise? In this video, I'm going to break down how all of that is affecting home buying. So if you're on the brink of stopping your home purchase process because you're so frustrated, don't just yet until you watch the rest of this video. I want to cover two things. First, I want to break down how inflation is affecting interest rates and how those higher interest rates are affecting your purchase power. And second, I want to break down why I think it's still a good time to run toward home ownership instead of running away from it. Okay, so first let's talk about how inflation affects mortgage rates. There are two things that affect the interest rate as well as inflation, and that is the CPI and the federal fund rate. Last year, the Federal Reserve had to slow down spending by increasing inflation. In response to their efforts, the mortgage rates jumped from their all-time lows in 2021. But what we're currently seeing is that the CPI, which is the Consumer Price Index, actually just went down from 7.5 to 6.1%. Which is a good sign because this means that the feds are actually starting to slow down inflation, but it's actually maybe a sign of what's to come with rising mortgage rates as well. Okay, so let's talk about the federal fund rate. Right now, the federal fund rate is currently 4.5%. For those of you who don't know what the federal fund rate is, let me explain that to you. The federal fund rate is the rate at which banks lend to other banks. The rate is used to control the supply of available funds, which in turn controls the interest rate and other rates that you see, which then in turn affects inflation and mortgage rates. When they raise the rates, it makes it more expensive to borrow, which makes supplies less, and then in turn increases the rate of your mortgage interest. So then of course, when they lower the rate, the exact opposite happens and interest rates go down. Okay, so now that we got that out of the way, let's keep moving along. So the next meeting that the feds are planning to have will be at the end of this month, and it's expected that they will raise rates 0.25%. If they do raise the rates 0.25%, then what we'll see is hopefully the CPI will go down some, which means inflation will be going down some. To understand how this works, let me explain some historical data to you. So last June, we saw the end of the largest jump in CPI in a 12-month period at 9.1%. which also was the time when we saw interest rates, that federal fund rate, go from 0 to 4.5%. And that was just to bring down the CPI 2 to 2.5 percentage points. The current number of available single-family residential homes that we have on the market today is 7,885 homes. We have now dipped slightly below having a 6-month inventory again and are back to seeing those lower inventories than we did in the last 6 months. Having less than 6 months inventory tells us that we're dipping ever so slightly back into a seller's market. Now, sellers, hear me out because I still know you guys are frustrated. There are less buyers in the market as well, and that's probably due to high interest rates. But with all that I discussed earlier about interest rates, CPI, and the federal fund rate, I do believe that there's more activity with buyers right now because they're trying to take advantage of this slight dip in the interest rate that we've seen in recent weeks. And I also believe that buyers are going to take advantage of this slight dip in interest rates that we're seeing right now before the feds continue to raise them in the coming months as they meet. I believe they're meeting at the end of the month, as well as in March, May, June, September, November, and December. And in these meetings, people are forecasting that they will be raising rates each time in order to curb inflation. Before we move on to the second half of this video, allow me to introduce myself to those of you who are new to my channel. My name is Lisa Lopez, and I'm a real estate consultant in the Las Vegas area, and I specialize in luxury real estate. I have a passion in helping families achieve the American dream of home ownership. For more videos like this one, be sure to subscribe to my channel. Okay, so let's get back to those rising interest rates and why I think you should still embrace home ownership. Something to remember as a buyer is that for every 1% the interest rates go up, you lose $10,000 or 10% buying power. So let me break it down a little bit more for you. If you were approved for a loan on an $800,000 home and the rates go up 1%, that means you now can only qualify for a $720,000 home. So because of this, it has priced a lot of buyers out of the market, which means if you are still in the market to buy a home, now is a great time because there's a lot less competition out there on the low inventory of homes that exists. Something else for you buyers to take note of is that in this lower inventory state, as we see more homes come on the market that are well taken care of, those homes are not lasting long on the market, as you can imagine. But you do have an advantage because, like I said, a lot of buyers have been priced out of the market, which leaves you with lots of more room for bidding because you don't have to have a bidding war or multiple offers on most properties out there. But we do expect that to change a bit as we approach the spring and summer months, which is when we see more homes come on the market, but we also see more saturation of buyers because more people are trying to make their move before the summer so that if they do have school-aged children, they're settled in before they start their new school year in the fall. Another reason I feel you should embrace home ownership even amidst the economic status of our country is because home ownership helps build your net worth through the equity that you will build in your home. If right now you're thinking, well, I'm just gonna sit back and rent for a little bit to see how the market plays out, I strongly encourage you to consider the fact that you're paying someone else's mortgage while building their net worth all on your dime. And on top of that, when you pay rent instead of a mortgage, you're relinquishing the right to write off your mortgage interest on your taxes, but you're allowing your landlord to do exactly that. If interest rates are what's scaring you, there are ways to circumvent that in the first couple years of your mortgage, and they're all paid for by the seller. For example, I just closed on a property where my buyer knew they wouldn't be able to afford their mortgage payment at the higher interest rate for the first couple years of their mortgage. So I was able to structure a deal where the seller paid for their 2-1 buy down and then they could actually afford their mortgage payment at the time of close. So for those of you watching that don't understand what a 2-1 buy down is, let me explain that. A 2-1 buy down is where the seller pays to buy the buyer's rate down 2% for the first year, 1% for the second year, and then on the third year, it goes back up to that locked rate that the buyer locked in at the time of close. So let me break that down a little bit further for those of you in case you're still confused. So say like the buyer locks in at a 6% interest rate, but the seller is going to do a 2-1 buy down. That buyer's interest rate effectively for the first year will be 4%. And then for the second year, it will go to 5%. And then the third year and on, it will go to 6%. And of course, that buyer can refinance that loan at any time within that buy down period should the rates come down below their locked rate. In this example, the 6%. There are also so many other reasons why I believe home ownership is the right thing to do. I understand that real estate can be a great investment, but most people who buy real estate buy it to live in it and make the space theirs. And when you own your own home, there's so many things you can do to personalize it. You can paint it the colors that you find welcoming to come home to. You can move walls or add bedrooms or change the backyard into a very zen space for you to read a book in. But when you're renting a home, you can't do all of these things. Or if you do, because your landlord happens to be a really nice person, you basically waste all your money because you're putting all of this money into someone else's investment who's going to make money off of you. So I I think when you own a home and you can personalize it and you're putting your money into it, there's a sense of pride that comes along with it. So that's just another side benefit to being a homeowner that I believe all people should be able to experience. And speaking of buying real estate as an investment, if you do buy that home and then you decide to move on from that home, you don't have to necessarily sell that home. You can actually keep that home and start a new rental portfolio, and you can actually start collecting rent and have someone else pay your mortgage while your net worth increases off of their payment. What else have you heard about the market that I haven't mentioned? I'd love to hear about it in the comments below. If you were to ask me my opinion and if I would actually buy a home in today's market conditions, I'd have to say yes, probably because I actually did just buy a home. But why did I buy that house? I feel like it's always a good time to buy a home. And I know a lot of you analytical numbers people won't agree with me, but I believe that owning a home is not just about an investment. Although, like I said earlier, real estate can be a great investment. But when buying a home for yourself to live in, the investment part is just a perk to home ownership. The best part about home ownership is the personalized experience you have when coming home every day. I know when I come home to a home that I actually own, I have so much more of a sense of belonging than I do when I go home to a home that I rent. And it's probably because how personalized you can make your space when you own it versus renting it. Like I said earlier, there are so many ways to personalize your space. And over the years, I've done so many things to my homes, like changing paint colors, remodeling kitchens, bathrooms, changing out flooring, all to accommodate my family's needs and lifestyles. Home ownership has its own distinction, and it gives you something to show for all of the hard work that you put in and day out. It gives you something to work for and towards. So yeah, if you were to ask me my opinion and if I think home ownership is the right thing to do right now, I definitely would have to say yes. It's the right time. To stay up to date and find out more about the market, check out this video where I discuss more about the Las Vegas market and what's happening. Don't forget to like, subscribe, and hit the bell so you get notified each time I drop a new video. I'll see you on the next one.